guys. Well, the show is finally up. I was trying to get it. I was trying to get it on for a while now, but it kept giving me this lag. But yeah, good morning. Thank you guys so much for tuning into today's live stream. It is May 13th, 2025, and to begin today's live stream, I do want to mention that today is CPI, and it turned out that CPI numbers here are lower than forecasted. So core CPI actually went up compared to last week, but the forecasted was 0.3%, 0.3 basis points, but the actual was only 2 basis points, and CPI month over month is 0.2%, gaining 2 basis points compared to last month's negative 1 basis points. And CPI year over year actually went down. So previously it was at a 2.4 and now it went down to 2.3. This increase in CPI in the prices for consumer goods is probably due to the tariffs. We haven't felt a significant impact due to the tariffs yet, but I believe as companies begin to run out of inventory and they have to purchase new inventory, and that's probably going to be when we actually feel the impact of the tariffs, because a lot of the companies here now, they're front loading, so they bought a lot of inventory in preparation to the tariffs, which is why they're able to keep the prices low. But I don't think they can do that forever, right? With the United States still having a 10% tariff across the board, I think it's just a matter of time until we actually feel the effect of it. It doesn't really seem like there's anything else here, but based on the technicals here for today, the one thing I do want to mention is that this is the daily candle from yesterday, and the daily candle, it's a bullish candle, right? It closed pretty bullishly, and my assumption coming into today would be to base a model based off of this high right here, right? I want to see prices take out this high, this daily high here, because if you simply just take a look at it, right, it's an up close candle, and you're most likely the next daily candle should take out the previous daily high. And to make it a little bit more simple, the red line is where we closed, and this blue line is the low, and the green line is the high. Just to make it simple, is the red line closer to the green line, or is it closer to the blue line? Well, if you guys can see, the red line is closer to the green line, meaning that we should take out this high. With that in mind, with that objective in mind, right, I would go into today framing a trade based off of that idea. But with CPI being released at 7:30 a.m. Eastern time, we actually ended up taking out the previous day high here. So let's take a look. So this is 7:30, and we took out previous day high, which was the draw of liquidity, and it seems like we are going to continue just to expand. Who knows? Coming into the morning, I would rely on the closure of the 4-hour candle and the 8-hour candle. So those two time frames they're going to provide me with a bias, right? So depending on how this 4-hour candle closes and how this 8-hour candle closes will give me an idea of if we want to, take out the 4-hour high or the 4-hour low. But if we were to close right now, like my best assumption is that we're most likely going to take out this 4-hour high. Again, I mean, that's a pretty easy, I guess, analysis coming into today. Bullish daily bias, we completed the daily objective. What do we do after the daily objective's been completed? We zoom into the intraday time frames, meaning I would go on to the 4-hour, 6-hour, 8-hour, and 10-hour and rely on those two time frames or those time frames. And we also did complete the weekly objective here as well. So as soon as we opened up here on Sunday, we gapped up, taking out the weekly high. And let's take a look at the 2-week time frame. So this was the 2-week candle from previously to bi-weekly candle. And yeah, I mean, the easiest assumption that you can make here as well is that we were going to take out the high here, and then yeah, I mean, we gapped up, completing the weekly objective pretty soon. But yeah, I mean, coming into this today, like I said, gotta be nimble, gotta rely on the intraday time frames, and not really forcing anything. I like the fact that we did expand towards previous day high though, because that was my draw of liquidity. I'm gonna note this CPI. Okay, so CPI month over month decreased from 0.3 to 0.2. No, it didn't decrease, it was just no, it actually increased in speed. Core CPI was 3.1. Yeah, it was a slight increase in core CPI. CPI is increasing, but just not at the rate that is forecasted, right? What does year over year mean? Year over year, it compares the current today's CPI reading to the value from the same month 1 year ago. How much consumer prices have increased over the last month? It is not a simple cumulative sum of CPIs. It is based on actual change in the price index from 1 year ago. How much prices change? Yes. Last month, year over year, how much prices change? Yes. CPI index. I want to know what the CPI index is. So on average, what costs $1 in the base year now? The consumer CPI for all urban for urban Okay, let's see here. It says for urban wage workers 320. let's do where was it at? 327.95. 327.95 minus 100 divided by 100. 2.2. Okay. So it increased about 200. Interesting. Rather interesting. Very, very interesting. May 13th. After falling. Over the last 12 months, the 4 seasonal adjustment. I think it's better just for the summary, huh? Interesting. Well, let's see here. We're about to close on the 4-hour candle in about 1 minute. And once we close on this 4-hour candle, we do have a new objective, a new 4-hour objective, which is why coming into this morning, my best bet, to be honest, is that we're most likely going to take out this 4-hour high here. And because this 4-hour high is the same high as the hourly, 30-minute and 15-minute, I am anticipating that we're most likely going to complete the 4-hour objective. We should take out this 4-hour high within the next 15 minutes or so. So let's zoom in here and let's take a look. So yeah, like this is the 7 o'clock candle here. We opened up, instantly take out previous day high, and there's the open. So I am anticipating that we're most likely going to take out this green line within the next 15 minutes. So within these sets of candles here, I want to see us take out the 4-hour high. And like I said, the 4-hour high is the same high as the 15-minute high, which is why I'm able to come up with that assumption. And let's see, it's just a matter of time until we take out this high. Increase. It's an increase in CPI. I don't like how it's a green number, which is why it's like kind of, or a red number, which is why it's confusing. But CPI did increase prices did increase. Year over year, it actually decreased by 1 basis point. But yeah, I mean, last month we did have a decline in consumer price index, in the consumer price index month over month. But yeah, I think that's enough of that for now. My mic stand is actually like broken. What the heck? That should be better. Alright, that should be better now. Hopefully the mic is still working, but yeah, it's been falling a lot. Sorry about that. Okay, so let's go into the economy. Yeah, monthly inflation did pick up, and yeah, so like I said, let's go back to the technicals. So we did end up taking out that 4-hour high, which was my objective. Now, coming into the morning, I don't want to force anything, right? I mean, we've already basically, we already basically completed the objective for me, for the morning at least. And that was the 4-hour high. So now, I'm actually just gonna go into my trading journal here with you guys and recap some of the pros and cons. So from last week, right, I have 3 pros that I do want to just continue to mention. Is that, I was able to take consistent trades, continue to require these 3 components that I look for, which is the higher time frame objective, a model, and an entry pattern. Having those 3 components, they're really going to keep me consistent and prevents me from taking any unnecessary, losses, because even if sometimes I have a directional bias, like this morning, my bias this morning was for us to take out the 4-hour high, but I didn't have a model or an entry pattern to support that idea. Because I didn't have those two components that I am requiring, I just didn't take it. And then that's completely fine, right? Just sitting on my hands and just allowing prices to do its thing is completely fine. So that's the first thing. Second thing I was able to do good from last week is being able to find a model with the higher time frame objective, right? And it just goes back to not forcing an idea, even if you have if you have an understanding of the order flow. If you are not able to find a model that aligns with your bullish bias, then you can't force that trade to happen, right? So for me, is coming to this week, I have to continue to be patient, allow myself to not be forced into taking a model or not taking a trade if my model isn't present, right? If I don't have a model that supports the higher time frame objective, then I don't take it. And there are two higher time frame objectives that I really look for. The first one is my expansion model. The second is the EQ model. So those are the two higher time frame objectives that I'm always looking for whenever I'm going to trade or looking for a trade per se. The last pro here that I want to cover with you guys is utilizing a time stop. So I'm sure you guys have seen price stops, right? Where you set your stop loss at a specific price level. However, there is this thing called a time stop where you allow a trade to run for a specific amount of time. And typically for me, that is usually the time frame of my model. So if my model is based off of the 15-minute time frame, then I would only allow 15 minutes to pass before moving my stops to break even. And it's a little bit simpler to explain if I had an example, but yeah, just understand and just be introduced to the idea of a time stop. And what can I continue to work on coming into this week? Well, what I'm doing right now, this is technical analysis. There's this idea of fundamental analysis where you analyze the company's financial statements and kind of come up with an evaluation based off of it. And the evaluation method that I'm working on and learning about is called the DCF, discounted cash flow model. And essentially it is projecting a company's future cash flows, and you want to bring it back to the present value. And after you come up with a sum, you are then given enterprise value, and from enterprise value you want to add back the cash minus the debt. After that is done, you come up with an equity value, or divide the equity value by the amount of shares outstanding, and then you're going to be given a price per share or an evaluated price per share. It's not going to be accurate because there's a lot of assumptions and skewed data that might offset the precision of the model. But that is something that I am working on and kind of learning about over the summer. I think the current model that I'm working on right now is Google's DCF model, and this is what I have currently here. So I have the revenue, I have the COGS, cost of goods sold and expenses, and all of these here. So from 2017 to 2024, these are historical values where I got this from, actual data, came from their financial statements released. And, using the historicals, I was able to project and come up with some assumptions where I can forecast that estimated revenue into the future. And, these might not be accurate, but the price per share that I was able to come up with is $514 per share. This might not be accurate, as my 2035 terminal value was a decent amount. It was almost like 13 billion, and then bringing that back down to the discount, bringing that to the present value, I was able to find that to be 5 billion. And added up all of the cash flows from the year 2025 all the way up to the year 2035, and the enterprise value was a whopping 6,263,838,000. Wait, no, that's 6 trillion. I'm sorry, 6 trillion. But yeah, I think there are two things here. So cost of debt is interest expense but divided by the total debt. And for me, just understanding the working capital or net working capital concept, it's kind of weird because I'm gathering the data for my change in net working capital from the operating, and it gives you the actual change, right? So I don't have to do any, weird stuff. But yeah, here, like, change in accounts payable, it was an increase, meaning that I had to actually use cash to pay off the accounts payable to anybody that I owe cash to or money to. And let's see. And I think coming into this week, I do want to learn more about how to understand multiples and how to compare different companies with different multiples. And to really sum everything up here, the first thing I do want to mention is, like I said, taking consistent trades. And how am I going to do that? Require a high time frame objective, a model, and an entry pattern for every single one of my trades. That's like the main 3 components of my strategy, right? Higher time frame objective, model, and entry pattern. Second, utilizing time stops and understanding how they work. I just gave you guys a brief explanation of how they work, but maybe coming into tomorrow's live stream, I will be able to give you guys a better explanation. Third is to not just use the higher time frame objective, but actually align my model with the higher time frame objective. I'm gonna be off for the recap, the pros and cons, and the improvements for this week. Hopefully I'm able to give you guys a good explanation of how I view prices. But yeah, what I do want to leave you guys with is this 6-hour candle here. It's about to close in about an hour and 44 minutes. So once this 6-hour candle closes, you're going to be presented with a new objective on the intraday time frames at least. And maybe you're given a higher time frame objective, and perhaps you're also going to be given a model that aligns with the higher time frame objective. Who knows? But yeah, just watch for these candle closures, and yeah, just be patient. You know, you're gonna have to wait an hour and 43 minutes for the candle to close, but yeah. And until next time, I will see you guys tomorrow at 8:30 a.m.